Coming up in this show, I'm going to bring you my opening comments on the markets. I'm also going to bring you some commodity market analysis with a deep look at GSG with high odds of a commodity surge ahead. Harvey's got stock sectors, and he's going to take a great look at a positive group, the gaming stocks. And I will show you how to give the gift of askSlim. And we'll send you back a gift, an Amazon gift card. And I'll bring you my analysis of the stock market. And we'll take a deep look at the S&P 500 for the next few months.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone gliding, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market soared to the upside last week as buying spread from the tech stocks and AI stocks across all sectors, even the beaten up energy stocks, got a lift. But the biggest upside moves were in the small caps, as they benefit the most from declining interest rates, and that we had for sure. The stock market was already very strong before Wednesday's Fed meeting, gaining ground on the CPI and PPI, showing inflation continued to recede. Wednesday, the Fed policy statement and Powell's presser gave a clear indication that Fed's rising interest rate cycle is over. Their projections were for cuts next year of about 2 to 3 times. That would bring the interest rates down somewhere between 50 and 75 basis points. But the Fed fund market is projecting 4 to 5 cuts in 24. And yields in 10 years absolutely collapsed, made a low of 3.89%. That is after trading up to 5%. And our downside target for the lowest level that we saw was 4.06%. So bonds were even stronger as interest rates came down very significantly. At the same time, the EU and the UK, they had their meetings, and they came out not as dovish as we saw our Fed here. In fact, I would call them more cautious, but still their economies are looking worse than ours. The huge buying lifted the Dow to an all-time high, and the S&P 500 within 2% of an all-time high. With all this exuberance, there is a lot priced into this market. So a lot has to happen right to justify these valuations. It means inflation must continue to recede at a time when government demands are off the charts. Well, still on the charts because they keep raising those charts. And there's massive deficit spending going on, and that's pushing against those disinflationary forces. And when interest rates move down, as they have sharply, it's sure to stimulate commodity prices. Furthermore, repeating from what I said last week, historically, interest rates and the stock market move together. So if rates are moving down, and very quickly right now, there must be something very bad out there, and stocks may turn to the downside abruptly. Or the interest rate market is wrong, and inflation goes up again, and interest rates spike back to the upside. Either way, there's something out there that's going to happen to change the environment that we see right now. Coming up, I'm going to give you my commodity index analysis, and it supports higher prices coming back to commodities and the end to this disinflationary period. For the stock market, with the Dow Jones Industrials at an all-time high and the S&P 500 having moved up very sharply, the market has reached to the upside well beyond our projections for this year. Still, Our agnostic analysis never fights the market, and some of the evidence has pointed to higher prices, and we've been bringing that all of the time, especially to our members, and thank you for those people that have written to us with all the great comments. Even though I strongly doubted the S&P 500 would get to an all-time high, and I said early in the year that I thought the Dow Jones could do so, now in our projections we have the all-time highs in sight. Later in the show, I'll show you a correction that's likely coming soon. But ultimate peak in this bull market is probably a few months out at the earliest. For the week, 7th week up for the indexes, S&P 500 during that period gains 15.5% plus, just a huge gain. For the week, the indexes are up between almost 3% and almost 6%. The Russell, absolutely the strongest, as those small caps move sharply to the upside. The bond market 30s, they just absolutely scream to the upside, almost 5 points. The 10-year yields collapse 34 basis points. Right now, at midday, as we're doing this report, they're trading down around 390, and I'm going to bet, and I did bet, that this is going to be the low interest rates we see for a while. Gold market, well, they like it when interest rates go down, and of course that affected the dollar, which fell. So gold market rebounded after a wild week that it had the previous week. Same thing for silver. Gold gains about $31, silver up about $1 on the week, and both of them are in resistances right now. I can see gold moving to about 2068 to 2088 right now, but then potentially pulling back temporarily from those levels. Of course, for the gold market, we're wildly bullish for next year. Dollar loses 1.6%, and that was in line perfectly with the projections that we had put out there. And I think the dollar is going to make a short-term bottom soon. And that's going to be probably in line with a rebound in interest rates. And that short-term bottom will probably be in line with what we see as a short-term pullback in the metals markets. Oil down small on the week, and there's a possible pop coming ahead. And our short-term projection, maybe intermediate, is to rebound to about $76 up there. And that's certainly not a bullish call. It's just, we think, a pop here in the market because it is due. All right, so I want to remind you, go to askSlim.com and get acquainted. You can become a free member or become a Snapshot member. I'll talk about that in a moment, and that's also free. And on YouTube, subscribe to the channel. If you're watching it here on YouTube, click the notification bell and like this video, give it a thumbs up. On X, follow me at askSlim. And for any questions you have on everything I show here or on our education and analysis in the markets, no matter what style of investor or trader you are, you want to write to Matt at askSlim.com. Commodity index analysis. I'll take a deep look at the S&P GSCI Commodity Trust. This is the ETF, which is GSG. That's of a basket of commodities that the GSCI represents. The holdings are about 24 different futures, commodity futures, and it's really a good way to get a good sense for the overall commodity markets. The important thing I think here is that I've mentioned a number of times in previous market week shows that I thought that once the Fed gets into a place where they were indicating they were going to cut rates or they start to cut rates, commodities would surge again. With all of the government spending that's going on and continues to go on right now, and the need to print tons of money based on all of the debt, the commodities can hardly do anything but go up unless there was a huge deflationary or disinflationary period, and that is very unlikely based on overall conditions. So I've had an overall sense that, once the Fed indicated they were done, commodities would surge, and that was what I called the doom loop. I want to look at that and see what the timing may be on that based on cycle analysis, because I think this is very important. Let's switch over now to the monthly chart. This is a little sense of the deeper analysis that I do, and I'll do some of this also when we get into the analysis for the year-end show, when I look at the stock market and gold market and dollar market. Those will be important analysis coming out first week of January. This is the GSCI Commodity Trust, and we're looking at a monthly chart. As you can see, we're going back way back to 2012 right over here. This chart goes back further, but I really want you to see the more recent, more than a decade of cyclical analysis that's in here. Remember that cycles measure from trough to trough, and generally there's a consistency, plus or minus a few bars, in this case months, that we're looking at. You can see this important low right over here, and look at the rhythms in here. So this would be an ideal cycle, and this is how it's shaped up. You can see that. You see this one way over here where that low came in, and then it broke that cycle bottom. Very early, we call that a left-hand translation, and that signaled that would be declining right into this period right over here, and you can see that. So you have this cycle here and here and here. Those are these three cycles, very clear. This was a super bullish period right in here for commodities, where you had a full cycle with only a 1 month pullback in here. We call this a right-hand translation, and it says you're going to continue to the upside. Also, we have in here our reversal scout, and it's very effective on a monthly chart. And you can see in here that it didn't even come down during that corrective period, and then when it rolled over here, it told us the peak was in place, and then it continued to come down. Now, we have this moving up again, flattening out just a little bit right there, but you can see where we are in this monthly. It is very early. If this were going to be breaking down, it would have sold pretty hard. This would have turned down, and we would have threatened that cycle low, but it didn't do that. That indicates that we're likely to get a move up again in commodity prices here into sometime into probably the second or third quarter of 24. This speaks to the potential for putting upside pressure in the commodity markets, upside pressure then in the interest rate market, as people begin to believe that, well, maybe the Fed doesn't have 4 or 5 rate cuts in them, and that Fed fund market is pretty much pricing the stock market to perfection based on those beliefs. So when commodities tick up in here and we start to get a firming of inflation or a threat of that, that will then be a problem for the other markets. That will raise interest rates, it will cause the dollar to rally, and it will make the Fed look at when they're actually going to do their first cut. So this is very early to be turning down. It's very likely, like you saw right in here where you had that and it came up and tested that high level right there. Here it did the same thing, came down and then come up and tested that high level there. And here it came down, did that in about the same time frame, and then blasted off to the upside. So it's very likely that there's a period in here of rising some number of months where commodity prices do rise. That will certainly affect the markets. Now let's take a look at the shorter term. So this is monthly. Let's break that down, because if I'm saying there's a rally coming in here in commodity prices, let's try to get that timed. Here on the left you see the weekly, and there on the right the daily. We'll break this down even further here, and you can see what we have in here are beautiful cyclical patterns. There are 1, 2, 3, 4 that were in that bull run, actually 5 in that big monthly bull run I showed you. And here you could see there were 1 and 2 cycles that were correcting. So you can see where that low lined up relative to where the ideal low was right there. You could see right in here the same thing, here the same thing. Here's where that low lined up right there. And here you could see there's a low due sometime in coming weeks, where you're likely to be moving up. Now, why am I showing a projection in here up into the second quarter of that strong of a rally, it's because this cycle is a basing cycle. In other words, it didn't take out that key low right over there, and were to have gotten underneath this level right over here, then I would be saying that, well, it's still in a negative pattern. But this is much more in a basing cycle. And what that says to us is that once this bottom is in place, you're likely to get a strong rally up here in commodity prices. So again, this is speaking to a more bullish scenario for commodity prices. And I did some comparisons, and this tracks actually the oil market pretty closely. So oil is a key thing to be looking at, and if oil makes a bottom, as we expect sometime in coming weeks, then that would be a time to really look for the upside in the commodity market. So you could see the basing going on in here and the likelihood of a rally. Let's switch over here to the daily chart. This is magnificent. Look at those cycle rhythms in there. So we broke it down from monthly to weekly and now to daily. And here we have the slim ribbon on here, which shows you just the beautiful positive conditions or negative conditions when they occur. On the bottom, you can see the slim ribbon PO. When it gives you those up arrows, it says resumption potential for the momentum conditions. When you see the down arrows, it's resumption for the negative conditions. You could see that failed right in there. And that's what we've been getting right in here, are those negative conditions. You could see the slim ribbon pointing to the downside, and look at the head and shoulders top. So you remember, cycles form these patterns. Here's your left shoulder right there. Here's the head that formed right in here, and the right shoulder. When the right shoulder fails below that level, it tells you the cycle energies are turning down. Once it breaks the neckline, it then points to a measurement of the distance from the head to the neckline, which is right here. What do you think of that? I mean, that's incredible. So now when you look at this cycle right over here, you're getting a rally right over here in commodities just these last few days as the dollar turns down. However, this looks like there's another test of that low coming in the next 1 to 2 weeks. So if you say 1 to 2 weeks on the downside right over here, and you look at the weekly chart where it says just a couple of weeks potential on the downside right over there, and the monthly chart looked like it was ready to be moving up again, all of this is in alignment with January being the time that commodities begin to firm in a significant way on the upside. And that speaks to what I've been talking about regarding the commodity markets putting upside pressure on inflation, or ending this inflationary discussion that we've been having, and then changing the tone about when the Fed is likely to be cutting rates. The Fed will be much more conscious of just holding where they are for a long period of time. I could see that there might be a downside move in interest rates coming next year at some point, maybe a couple of cuts to the downside, but that's only if the markets turn very weak, the economy turns very weak, and then the stock market turns very weak. That's the only way we're going to get some serious cutting from this Fed, who caused the inflation, who caused the problems, along with the government spending, and who is very likely to be responsible for the next upside move that we see in commodities, which is likely to be coming very soon based on this analysis. I hope you found that interesting, and we'll be able to see how well it works as we look into the first couple months of 2024. I'm going to give some major market analysis coming up around the first week of January. You want to be able to watch that. Make sure that you take a moment and go to our website. And if you're not a member at all right now, sign up either as a free member or for our Snapshot SIR Lite, which is right on the front page, and you'll be able to watch my show that's coming up, that's going to give my big picture and my projections for the major markets in the coming year. So just go to the front of the website. You see right here, you can get the free S&P analysis. Every single day, we're going to email that to you. If you sign up for the snapshot, just put your name and email in here and subscribe. No credit card necessary. You're going to absolutely love getting that information from us daily, absolutely for free, and you'll be able to see my big picture analysis. This is a great segment in here. Aubrey does some great illustrations of cycle analysis on what he deems as a positive group, looking at 4 key stocks in this group. Give it to him, Aubrey.
Stock sectors, gaming stocks for December 15th, 2023. This is Arvi Ramachandran. So, as part of this week's Market Week, we wanted to bring you a mini stock sectors on the gaming stocks. Now, we have been doing stock sectors for over 8 years now. We have almost 240 stock sectors videos in our trader library, which is available now for level 2 members and up at askSlim. What we do in stock sectors is we comb through now hundreds of stocks in our universe and identify groups or sectors that are acting either strong or weak and setting up for opportunities. And then we go ahead and show you those opportunities in the stock sectors video. So it is a great way to get an understanding of what are those more interesting swing opportunities that we see. And then what we see right now is a long side opportunity here in the gaming stocks. So I just wanted to have a brief segment here in Market Week to highlight that for you. What we will do is we will look at 4 stocks. We will look at LVS, WIN, MGM, and CZR. And after this video, you'll have a clear sense for the long side opportunity that we believe is likely ahead here for the gaming category. So with that, let's go ahead and jump into it, and we will look at LVS first. So this is our both weekly and daily cycle analysis for LVS. We have just likely formed a key intermediate term bottom here. There was a low that was due 11.6218, and we are now turning back to the upside here in LVS. We are looking for a oversold bounce here towards this zone from 52.25 to 54.48 on the intermediate term. If we shift over to the short term, this is our short term cycle analysis for LVS. And you can see we are now turning up nicely here in LVS. We did actually just have a short side trade idea for our level 3 and 4 members right here that played out perfectly. And now we are turning back to the long side as we are seeing a likely key intermediate term low that is now in place. What we are looking for is just a small flag down here into the zone from 47.57 to 46.42. It needs to hold above the 78.6 at 45.67, and on the upside we would be looking for a move through 50.46 here in Las Vegas Sands. If we go ahead and shift over to WIN, that's WYNN, we will pull up the weekly chart, and you will also see a theme here. There is also a weekly low due here, 11.20 to 115. We are looking for a move into this zone from 96.92 to 150. Shift over to the daily, and you will see there is also a daily low that was due here, and we turned up really right on time here. What we are looking for is also just a small flag, and then for this to turn right back to the upside and move towards that 78.6 at 92.91, and then this old swing high here at 95.91. So an interesting pattern also setting up here in WYNN. If we go ahead and shift over now to MGM, this is actually one of the leaders in this group, and you will see it right there, absolutely blasting off of that same key intermediate term bottom. Overall, we are looking for on the intermediate term a move up towards that 78.6 at 47.61. Then we have this old high here at 51.35. Our next key intermediate term low is only due out in the April to May time period. Now let's go ahead and shift over to the daily time frame, and what you see here is a really strong pattern here in WIN, as we have already cleared that prior cycle high versus 41.31. At this point, if we were to see a flag, we would look for it to hold this zone here from 43.15 to 41.58, and then turn back up to the upside and move into the top of this zone, which comes in right around 46.34. One thing I also wanted to note here is in the first 3 stocks we have looked at, there is a daily low that is due also right around mid-January. So keep that timing in mind here as we look forward. If we finally shift over now to CZR, that is Caesars, this is now a laggard in CZR. However, there was also a key low that was due here on the intermediate term, 10.16 to 12.4, and we have now turned up nicely. We are looking for a move towards that 78.6 at 55.66, and that is with Caesars closing right on 48.63 as of the time of this video. Shift over to the daily. Now, these are longer cycles in Caesar. Keep in mind, what we draw here at the bottom are actually cycle brackets. They are a drawing tool. They're simply a way for us to visualize the money flow patterns. That's really what they are primarily used for here, as per our overall method. And right now, what we're looking at is we are in a rising phase still in Caesars. We have not formed a key cycle high yet. Now, there is a zone here from the 61.8 to the 78.6, from 50.94 to 53.31. We'll be looking for a high to form around there, and then to put in a higher low basing cycle here. If that can happen and we form a low inside of this cycle timing window, which has a low due 110 to 125, then we would be interested in a long side move here for a move like that. On the downside, we are looking for this to hold 45.94 to 43 even in CZR. Okay, so that is a look at the mini stock sectors video on the gaming stocks. As always, if you have any questions or comments, feel free to post them. And I also finally wanted to note that we do still have our Give the Gift specials going on into year end. These are the best deals of the year. So if you wanted to go ahead and sign up for one of our memberships, now is the time to do so. Thanks again, and I hope you all have a great day.
Great work. Stock market analysis and projections on the S&P 500. Here's some important information. First, it tells you about our analysis and what it means for you when you use that analysis for your own trading and investing. Be sure to read this slide. askSlim holiday specials for 2023 are now available. Give the gift of askSlim. Go to our website at askSlim.com and you can learn more. Or write to Matt at askSlim.com and you can get all the information about our great services. This is what the holiday special is. Give the gift of askSlim for 2023. We have special rates. That's 3-month memberships, non-recurring. That means if you give the gift to somebody, well, you don't have to worry about them getting billed again, or if you want to take it for yourself, it's just for 3 months. Then you'll have to decide whether or not you want to stay on with that membership. Give the gift to someone you know who loves trading, or to somebody who loves technical analysis, or give the gift to yourself. It's great for first-time members or for those of you that want to try a higher level and want to upgrade. And we're going to give you a bonus gift. That means you give the gift to yourself or somebody else, and we're going to give you a gift. For level 2, sign up for 3 months for $114.75. We're going to send you back an Amazon gift card for $20. For level 3, give that special for just $232 for 3 months, and we're going to send you back $50. And for level 4, $303.75 for 3 months. Unbelievable deal, because we're going to send you back an Amazon gift card for $100. And our level 4 memberships includes our custom Thinkorswim charts. You can upload those right to the platform, and you will get all of our proprietary studies that you've seen that are just amazing. To sign up, go to askSlim.com, and you can write to Matt at askSlim.com for all the information that you need. The askSlim holiday specials for 2023. Give that gift of askSlim. Gotta watch this. Stock market analysis, S&P 500. We're going to look at the SPX intermediate analysis, plus some of our proprietary studies that I think you're going to find so important to the analysis and may be very important to you. And I'll tell you how you can actually get some of these proprietary studies. So let's switch over to the analysis as we look at the S&P 500. This is the weekly chart of the S&P 500, and essentially we're looking at the bull market here that started back here in October of 22 and then has rallied all the way up through where we are now, coming to the end of 23. Our upside projection for the year was around 4350 on the S&P 500, and certainly it moved well beyond that. We thought it would be a bull market year, and it certainly has been, and we thought that the Dow would be the only one in this bull market that could make it to an all-time high, because I thought the money would be moving into those cyclicals, old economy stocks. It turns out that ended up to be correct, But now we have to say that all the indexes, well, not the Russell, but the S&P 500 and the NASDAQ certainly have a shot at all-time highs. Now with the S&P 500 less than 2% from the all-time high. You can see on that chart what we have marked off right now as we see the rise in here. Now you can see the cycle patterns as they are in here. This cycle a little bit on the short side but clear. This cycle a little bit on the long side but clear. This correction here about 10.9%, which is very much in line with really a small correction in a bull market. And you can see in here that we have these beautiful cycle rhythms and this advance 7 straight weeks on the upside here in the S&P 500. This is the bottom of the fib extension. That's the 78.6% fib extension. This is the 100% up here. And you can see the 100% is at 4,900. And that's why this upper green track is in there, because it points to that level. Here's your all-time high, 48.1862, and you can see where that comes across right over here. Now, I talked about in the beginning of the show that I thought that there was likely going to be a corrective period ahead. This is really an interesting spot, and the market is very overbought right now, and I'll show you that on the short term in a moment. This would be a great spot for this market to stall and then go into a correction. Now, this is where the ideal low is, in between these two lines, and here's the center of it right here, which comes out to the end of January. So this looks to me like the highest probability would be a decline out into here. That's like this one right in here that you can see, and that was pretty steep. That came down from around 4,100 down to around 37.65. So it was about 240 points on the downside. This one that happened right over here was just absolutely super strong, and that mid-cycle low that we call it right over there, and that only fell from 44.48 down to 43.22. So that was 126 points in the absolute strongest condition that you'll ever see. We call this a swamped cycle. If this turns out to be similar to that, then you would see that at least 120 to maybe 180 points on the downside. Supports right now are this 23.6%. You can see the projection there at 45.86. That would be about 140 point decline, or to this level right over here, just under 4,500, which would be over 200 points in a correction in here. It is extremely likely that there will be a correction from sometime here in December to sometime here out in late January to early February. That is very unlikely to bring us a peak in the bull market. It is much more likely that the peak comes out over here, or at least the peak in this leg, and that would take you out into the late February to late March period. And then here is that big period of risk. You can see the period of risk here, big decline, period of risk here, big decline, period of risk here, big decline, and that's out over here. I have talked about the fact that I thought that interest rates were going to pop out into March, April, and that I thought that would negatively affect the stock market. That's where this comes in over here. So I'm trying to do, about a 1 to 4 month projection right now when I look at this, and it calls for this upside launch to stall, and then probably chop and then get into some corrective period in here. I'm going to call it 120 to 220 points that it pulls back in the S&P 500. And then out over here, February into March, it regains that and potentially goes to an all-time high. Some people might say, well, why wouldn't it go to an all-time high right now? Well, the only argument I have, because all of our analysis points to the upside right now, is an extreme overbought condition. I'm going to switch over now, and this is looking at the shorter term. I'm looking at a daily analysis in here, and this is an area chart that uses the slim ribbon on there, the slim ribbon PO, and down over here, this fantastic option bias indicator, the OBI. The OBI does a fantastic job of telling you when there's a trend and when there's an extreme. You could see right over here when it was very weak, these red dots are telling you the market's in negative condition. Even when momentum neutralized, it told you it was still in bad shape. Here is where it was extreme on the downside over here at the end of October, and it gave you a bottom warning right over here. Those are those orange dots of extreme oversold right there. Now you can see it gave you all of these positive readings. This tells you put your option biases in on the long side. That's what it's built for. And now it's giving you this top warning right over here, and it says this is an extreme. So I talked about the likelihood of at some point very soon we are seeing the market stall right now, and that is likely going to happen as we get into this period right over here. Let me get this chart back up. Let me move this out of the way. As we get into this period right over here where we're in these resistance areas right there. That says to me that there's some pretty significant resistance between the bottom of this fib extension area, this fib extension level right over here. So that's right over here at right around 47.33. We have it labeled on our some of our other charts. This level is 47.80 approximately, 47.77, and of course you have this peak right here at 48.18. Very likely to run into trouble here. We're extremely overbought. Get into a chopper period, get a correction over here sometime into mid to late January, fall between 120 and 220 points, and then move up again. What I give you is the sum of the evidence, the highest probabilities all of the time. This is our indicator in here that is our reversal scout, and when it's moving up on the weekly chart, it tells you that there are issues for the shorts. You are selling under these conditions, you could get really in trouble. However, when you get momentum peak, as you see right over here, and especially moving into a period of risk, that's a period you would expect the market to go down right over here. So that would be what would be expected out over here, but really not until sometime in February into March and April where that risk is. For now, just chop, come down, and then move to the upside again. Let's look at some of our proprietary indicators in here just so you can get a feel for the things that we're looking at. This is our market, our MCM, Market Condition Monitor, which is just an incredible application. This is available for our level 3 and level 4 members. We're looking at the version right now that's available for level 4, and you can see in here that we're looking at the S&P 500, the QQQ, the IWM, and the DAI. This, of course, are the 4 major indexes we look at, and this shows you right over here the setup conditions right now, and they are very bullish, bullish, and very bullish. This change log over here tells you when things change in there, and you can actually switch based on your trader type here. If you want to know the conditions in the short term, you can see them right there, and they're all very bullish looking at that. So there's no question about that the indicators have kept our people on the long side. And like I said earlier in the show, we've gotten some great emails from people that have done very well using our proprietary indicators and analysis. Let's go back to the intermediate term right over here. And you can see in here, I can just look at the setup conditions. I'm just going to scroll right over here. And you see here the top 4 of the very bullish right there are XME, EWZ, URA, uranium has been amazing, and Shopify, very bullish. I can scroll down in here and you can see Micron, XLK, SMH, those semiconductor stocks doing just absolutely super well. Let's just go to the bearish side here, and you see Pfizer, FXI, BABA, that's China and a Chinese stock, and the corn market, all very weak. So this is a just absolutely fabulous set of indicators that we have in here. Again, level 3 and 4. Level 4s, you can then set up notifications, as you see right over there. You can tell it when you want these conditions you want it to notify you about these conditions. So it's just fantastic in there. So just great information you can get out of here. One more thing I want to show you for the longer term traders. This is our askSlim Momentum Tracker. that you can see, and this is the looking at some of the indexes right over here. This has got just a huge amount of groups that are put in there that you can look at. So I wanted you to see the diamonds right over here. They've just made an all-time high, of course, and those conditions, long-term, intermediate, and short-term, are, you can see, all very bullish. If I go here and just click on that little arrow, I'm just going to bring up the chart so that you can see. Remember, this is for a 3-month plus outlook right over there. So we're going to pull up this chart, and you can see in here this fantastic chart that has just kept you on the long side. This goes all the way back to basically January of this year, and you can see where it gets very positive, where it gets less positive. And look right over here in November, where it went from mixed, where it made that low, so the indications were mixed, to slightly positive to very positive right there. And for investors, that just kept you on the correct side of the market. So that's just unbelievable information that you could see in there. And I encourage people, if you're not a member, become a level 1 member, and you can get the momentum tracker. It's just an unbelievable application for you to use. I wanted you to see that as we have looked now at this analysis. Just reviewing, we looked at the weekly analysis. It showed very strong conditions, now running into a resistance area, coming up to an area the market likely is to chop and then correct out into January, late January potentially. The daily chart would show an extreme overbought condition, and overall the apps are telling you the market is in very strong condition. And if there is this pullback we're looking for that comes based on the cyclical rhythms or the energies in the market, it is not likely to last long on the downside and much more likely to go back to the upside again. And certainly not what I originally was looking for was the potential for an all-time high in the S&P 500. But the analysis is now showing that is a potential. That is the look at the stock market. I hope you love that analysis. Make sure that you send people to our site so that they can get this unbelievable analysis from what is maybe the best analytical team out there. So please do go to askSlim.com and get acquainted by signing up for the SIR Lite. I showed earlier in the show how to do that. That's the snapshot, and you'll get our information free every day. Go to YouTube, subscribe to the channel, click this notification bell, and then you will know when we put videos up. Like it, give it a thumbs up, and watch our member videos in the playlist. On X, follow us at askSlim, and any questions you have on everything that I presented today or anything about our membership and analysis, education, please write to Matt at askSlim.com. That's it. I want you to be so unbelievably careful because it is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city.